Okay. First, 5.1 type of comparison. That means we are comparing our actual result with other information. All right. When we compare our actual result with other information, it can help to put the information into context, and it may show up error. Comparison can be financial and non-financial. Everyone can understand? Financial is like our sales revenue, production cost incurred. Non-financial, it could be our sales quantity, production quantity, and labor hour taken. Can everyone understand? So just in case some of you doesn't know what is the meaning of put them into context. That means by comparing the actual result with other information, we can put them into context. That means after we do the comparison, it can provide additional information regarding the results. All right. After we do comparison, then we can obtain more information regarding the result, whether it's the actual result or our budgeted result. Can everyone understand? Can, right? You guys still remember I have told you guys before, if today by looking at one set of information, we can't determine anything. Like if I tell you my company made 1 million profit this year, how do I know if this is good? We have to compare with other people, or we compare with previous period, right? Therefore, by doing comparison, we can obtain more information. Can everyone understand? Can all right. So before we can move into calculation, there are a lot theory waiting for us. All right. So pay attention. These are equally important because this might be tested in your exam. All right. So they say manager will compare sets of information so that they can put the information into context. That means we can obtain more information by doing comparison. Can everyone understand? Can all right. Without a comparator, it cannot be determined if the data show good, bad, or indifferent performance. Everyone can agree, right? If we do not do comparison, we have no idea what is going on. Am I right? So next, doing comparison, it can highlight all the mistake and problem. Am I right? Comparison can also be financial or non-financial. Financial such as comparison of budgeted costs versus actual costs. Non-financial, it could be customer awareness of two brands. Okay, we compare like is customer is more aware about brand A or customer more aware of brand B. We do comparison. All right. Then below are some of the financial comparison or financial comparator that could be used to compare against our actual result for the current year. That means when we have our actual result at the period end, we can use the actual result and compare with all these four figures. The first one, we can compare with our budgeted figure, our forecasted figure, our corresponding period figure, or our previous period figures. Under MA2, you mainly learn about this lah, but of course in real life you can compare with lagi banyak lah. Okay, even more like industry average, your competitor information, all those kind of things. Is everyone okay? Hannah? All right, so let's look into it one by one. What does each of the financial comparator indicating? The first one, we have budget. What is a budget? Budget is a financial plan that organization make based on what they want to happen. Can everyone understand? Just like our national budget, this is what the government trying to achieve. But whether they can achieve or not, this is another story lah. But at least they got the intention to want to achieve such thing. Can everyone understand? This is like your target. Okay, budget is like our target, what we want to achieve. Okay, so budget may be a target rather than a prediction. Okay, you want something happen. Third one, comparing the budgeted result with the actual result, it allows manager to know if they will or if they are achieving their desired result or target or not. Can everyone understand? At the end of the period, when we have our actual result, then we compare with our budgeted figure. Then we can know or we can identify whether do we achieve the budget that we have set at the initial stage of our period. Can everyone understand? Can still can all right, moving to the next, we have forecast. So what is a forecast? A forecast is an estimate of the likely position for the business in the future based on past or present condition. So in a layman term, forecast is an estimation that we make for the future based on past performance or present performance. Can everyone understand? And you make estimation for the future based on past or present condition. Can everyone understand? Can okay, very good. So next, they say it is just a prediction of what is likely to happen, the most likely scenarios. All right. Forecast enable the manager to identify problem and therefore corrective action can be undertaken as soon as possible. Can everyone understand? Because forecast is like estimation. If by looking at the estimation, we already know our company is going to make a loss, are you going to just sit there and biar ganja lah? Cannot, right? Therefore, by looking at the forecast, if something is not right, then we have to take corrective action as soon as possible. Can everyone understand? Can understand? Okay. Next, a common example of forecast would be cash flow forecast. All right. For your information, cash flow forecast is something that we're going to learn at the very end of our syllabus. Okay, this is something that is not easy lah. I would say you got to know how do we prepare a cash flow forecast. Okay, stay tuned about it. Then at the end of the period, management will compare the actual result with the forecasted figure and try to evaluate or understand why they are different. Can you guys see the relationship? You are using the actual result compared to the future estimation. All right, and see is there any different or is there any bad things that is going to happen. If there is any bad indicator, then we have to take corrective action. Everyone can understand? Can follow? Very good. So moving to the next, we have something called previous period as well as corresponding period. By looking at the words, it might sound lebih kurang sama, almost the same, but in actual, in MA2, there are actually some difference between previous period and corresponding period. So what are the difference? Listen carefully, guys. Previous period, by comparing your actual result with the previous period, it allows us to identify a parent trend so that we can make informed guesses about the future. Okay, you compare the actual data with the previous period data. After we compare already, we can identify the trend. See how does the sale revenue go. Then we agak-agak, we roughly make an estimation for the future. Can everyone understand? And we're going to learn this at the end of our syllabus also. Okay. Next, analyzing actual performance against the previous period so that manager can identify any problem regularly. All right. If suddenly in this year we incurred a significant cost that we never incurred in the previous period, therefore it is something that worth our attention. Can everyone understand? Can So come to here is usually previous period. What do we mean by it? We compare year by year. This year is 2025. When we say compare with previous period, we are mean 2024, 2023, 2022. These are previous period, year by year, year by year. Can everyone understand? All right. So moving to the next one, we have corresponding period. What do we mean by corresponding period? It means it is only applicable when an organization have fluctuation in their activity pattern depending on the year or season. All right. For example, t-shirt manufacturer may be busier in summer than winter because more customer may want to buy t-shirt in hot weather. All right. If this one is very difficult for you to understand, just imagine any business that manufacture Christmas card. Okay. So usually the business will be very good in December, am I right? During the Christmas month, right? So if today you want to compare their performance, do you think it is good to compare by year, or do you think compare month by month would be better? Month by month would be better, right? Because we have to compare December by December. Okay, so this is corresponding period. Instead of comparing 12 months, which is the previous period, we comparing the previous December only. So this is what we call as corresponding period. We compare with a specific or very selective period only. Okay, due to yearly or seasonal fluctuation. Can everyone understand the difference? Previous period is usually compare 12 months, 12 months, 12 months. But corresponding period is we can compare by the specific period only.